So, ladies and gentlemen, I welcome you all to the post-result conference call of Brand Concepts Limited. Today, from the management, we have with us Mr. Abhinav Kumar, whole-time director and CEO. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which could exemplify your judgment and further expectations regarding the developments in the business. These forward-looking statements may involve risks and uncertainties that may cause actual development and results to differ materially from our expectations. Also, this is a reminder that this call is being recorded. I would now like to hand over the call to Mr. Abhinav Kumar, Whole-Time Director and CEO. Abhinav, I would request you to kindly brief the participants a bit about your business
Right.
and performance for the quarter, post which we can open the floor for Q&A.
Perfect. Hi, good afternoon, everyone, and thanks a lot for joining, taking out time and joining today. I'll just first give a brief about what Brand Concepts is and what we do, how we operate, and then I'll come on to the quarter results as suggested by Vinay. So, Brand Concepts as a company, we are into fashion accessories licensing, right? The business of licensing is I think it's a very evolved concept internationally, and now in India it has started gaining steam. So how licensing works, I'll just give a brief understanding of what licensing does and how we work in that space. So licensing, so any brand which becomes big and they want to have a brand extension, they launch different categories, right, to extend their brand into various different categories. And in order to do that, the brand necessarily does not have the core competency of that category. So, for example, if it is Levi's, for example, and if Levi's tomorrow, it's a denim brand, right? It's a worldwide denim brand, and that's what their core competency is. But if tomorrow Levi's wants to launch, say, watches, they feel that the brand is quite big and we want to get into watches. So, but how will they get into watches? They don't have the know-how of watches. So what they do is they contact a watch expert, right? And they outsource the whole brand to that watch expert. And this outsourcing is known as licensing. It's outsourced through a means known as licensing agreement, where you give the license to that company. Now the company gets the rights not only to market the brand, but also to design, develop, manufacture, and control the whole supply chain. The entire chain is controlled by this company, right? And in order, in lieu of selling that brand, they get into an agreement of a royalty payout. So whatever sales that happens, there is a certain percentage of royalty which goes to the principals, the brand owners, where the brand owners control the entire aspect or the functionality of their brand is through exercising a control over design approvals and quality approvals. So obviously the design, quality, all of this is approved by the brand so that the brand sanctity is maintained, and rest everything is left to the licensee to operate the entire business. A lot of companies that we know are working through this licensing mode or franchising mode in India. So for example, a lot of these Madura brands that you see, a lot of Reliance brands, a lot of Arvind brands, they work through this genre itself. So in a way, we are very similar to these companies who are operating into multi-brand setup. The only difference is that they are into apparel and we are focused on accessories. When it comes to accessories, there are three categories that we particularly deal with. One being travel gear. When I say travel gear, it's right from soft bags, backpacks, business cases to your luggage, hard luggage, soft luggage, the entire realm, entire gamut of products under travel gear. Then we have small leather goods, in which we do men's, women's, belts, wallets, and other leather items. And the third category that we have is women handbags, ladies' purses, and all of that. So these are the categories that we operate in. And in terms of our distribution, if you see, in terms of sourcing, for example, we have factories which manufacture for us. So we tie up with these factories, and they work on our designs, our products, and manufacture and give it to us as a contract manufacturing. Once we source in the products, then we start distributing it across the country. All the licenses that we have are for Pan India, and there are exclusive licenses. So apart from us, nobody else can sell those products officially. So in terms of our distribution, we cover the whole gamut of right from your big department store chains or large format chains like Shopper Stop, Lifestyle, all these guys, to having our own stores, own EBOs by the name. Either it would be the particular brand store, or we have our own format of stores by the name Bagline. So we operate bagline stores across the country, and we sell through our own stores as well. And then, of course, we also have distribution where we cater to a lot of mom and pop stores. So we have distributors across the country in a lot of states where we then cater to the multi-brand outlets of that particular town, city, or state. Apart from this, we are also present on the digital platforms. So all Amazon, Flipkart, Mintras of the world. And we have now, in fact, started developing our own marketplace as well. And we're seeing a good uptick on the marketplace sales as well. So, so that's about distribution. So that's about what we do. So just like how any brand or any company operates, right from product inception to the end sale point, we also operate similarly. We control the entire life cycle of the product. And yes, so that's what we do. Now coming on to the quarter results, I think we've seen a very healthy result and a positive growth. So from a quarter-on-quarter perspective, if we look at, I think we've grown by almost 20%, more than 20% quarter-on-quarter. The EBITDA has grown over 21.5%. Needless to say, the net profitability and PBT obviously shows a much higher growth percentages. So it has been a really good quarter for us. And where we see that this quarter, what has helped us, has paid off well, is that we've grown in terms of our own brand sale also. So our own brand sales also have started growing. We have grown in terms of the large format stores have bounced back very well. So post the pandemic, I think people are wanting to sort of go out and shop, and hence the overall consumer market sentiment has been very good. Sales in the premium segment has been very good. So our ASPs have also in fact gone up. Our discountings have come down. So all these are very good signs for a retailer, for a brand, and it shows that the product offering that we are giving to our consumers, the consumers are very well accepting those product offerings. So consumer sentiment in the premium segment has also benefited us a lot. Apart from that, now our distribution business has started to make a very good headwind. We've started our distribution in the Northeast sector. We were not present earlier in the entire Eastern market. Now we have started the Eastern market, and we see good results in the Northeastern market, where we placed distributors, master distributors, and work has started to pay off really well. So yes, so these have been online obviously continues to play a dominant role. And as a company, we are developing a lot of in-house strength to be able to capture the entire digital sales, and the entire digital platform is managed internally. So I was speaking about the marketplace. We are operating marketplaces on all the major platforms. So Myntra, Agio, Amazon, Flipkart. So marketplace gives us a a much better control, a much better handle on taking our products live on these platforms and control the discounting part as well, and still grow in terms of sales. So our marketplace sales have shown a significant growth over last year. So yes, so these are the aspects which have actually contributed for our a good quarter result. Um, I think that's all from my side from the quarter perspective. Going forward, in the next 3 quarters, we expect to continue similar kind of a momentum. In fact, not only for these quarters, we also look at that in the next 2 to 3 years, um, we should be able to register a healthy growth. Um, the company is working very, very actively with a couple of new brands to be added, and we're very, very confident that we should be able to add at least one brand in this year, uh, and which will be, and we are very focused on adding only international brands. So, so yes, that's the outlook for this year and the coming years. So I think we could now just open the house for questions. I think uh,
Sure, Abhinav. We already have a question from Agastya Dave. Agastya, you can go ahead.
Hey, am I audible?
yes, yeah.
Hello, Mr. Vinay. Kya hal? And thank you, Vinay, for hosting the call. How are you, sir?
All good, Agastya. All good. Please tell me.
Great, yeah. So amazing quarter. Very nice performance. Sir, three things are still not clear with respect to the business model.
Mhm.
One is, can you take us through individual? I'm not asking for names.
Mhm.
Don't give out names, but can you categorize the various brands and the products that you have, and what can you go a little bit more in detail as to which pockets are actually seeing more growth? Is this a very broad based growth that you are seeing and likely to see going forward, or are there particular products? For example, is luggage doing much better than any other uh, category, or some such variation across brands and across categories and across price segments. Second question was, in terms of the margins
Mhm.
and in terms of the revenue growth in both these cases, will we see going forward as the scale of the company goes up that we will see a quantum jump in one particular quarter, and you consolidate at that level for the next 2 3 quarters, and then again a step up move, or it will be a more smoother upward journey? How should we understand the growth of the business going forward? Will it happen in like very discrete uh, uh, jumps, or will it be like a more secular growth trajectory? Uh, those are the questions. And how do the margins play out? How does, for example, operating leverage play out in the business?
Right. So the second question, probably I would need a little more clarification, Agastya, but first I'll answer your first question. So the brands that we currently have today, so in the travel gear segment, uh, the active brands today are Tommy Hilfiger,
Okay.
and the second is our own brand by the name Vertical, right? Uh, in the small leather goods segment, we just have one brand, which is again Tommy Hilfiger.
Mhm.
And in the women handbags, we have our own in-house brand by the name Sugar Rush. We used to have 2 or 3 other brands. We had and Global Desi and a travel gear brand and a sports brand by the name Head. Right. These 3 brands were there, which uh, post COVID, during the last year, we sort of let go of those brands, but there is a period of sell off and everything. So currently, also we would be holding certain stocks, and we are in the process of
Right.
selling out those stocks at a price probably a little lower than the regular prices, but that's the way we are structured today. So if I talk about from a brand share perspective, obviously, because the other brands are also on their way out, Tommy today has a much larger share. So about 83-84% of the sales is from Tommy. About another 10% is now from our own brands, and the rest 6% is these brands which are sort of going out. That's the fair sort of understanding or fair comparison. Now, if I talk about within Tommy, if we talk about from a category perspective, right? So, if we see our SLG business we have been the number one brand in small leather goods across all formats, right? Whether it is large format stores or whether it is e-commerce, we have been one of the largest players in the small leather goods segment, right? So our small leather goods segment, even in spite of being the lion's share, or probably almost close to 40% of our sort of this thing. Yeah, we've grown there also, but we would have, so for example, quarter on quarter, we would have grown at say about 11.5%, right? But yes, the travel gear business now has started seeing, because people are now willing to travel. Since now people are willing to travel, the travel gear business has started seeing a very, very good growth over the previous quarter. So we've registered almost 27% quarter on quarter growth, 27-28% quarter on quarter growth on our travel gear business. And
Right.
I see this momentum continuing going forward, right? Because if you'll see, travel gear as a category is poised for a very, very good growth from a medium to long term perspective in India. The travel requirements are increasing, whether it is because of office travel, official travel, or whether it is
Right.
because of personal travel requirements, right? So
Right.
we see that I particularly see that we will still continue to have this kind of a growth momentum. And what is happening now in travel gear is that, so while small leather goods and these items were always considered to be a fashion dominated item, right? So a belt used to be a fashion dominated accessory. Travel gear was never seen as a fashion dominated accessory, but the way I foresee that what happened with watches as an industry will happen to travel gear also going forward, because fashion is from a country perspective, from the youth of the country perspective, the young population that our country has, fashion is something which is making inroads in leaps and bounds, right? So just to give you the analogy of why I spoke about what happened with the watches industry, if you will recall, till late 90s, watches was still a timekeeping device, right?
Right.
I give this example time and again to make people understand the power of fashion. So probably I'm repeating myself on that count, but till late 90s also, a watch was given by his father to his son, and more often than not, or 90% of the time, it used to be an HMT watch, right? And look at 10-15 years later, by 2010, watch was a fashion industry, right?
Right.
Today, people have more watches in their closet for various different occasions, right? And even a company like Titan has a very, very healthy licensing portfolio. So Tommy Hilfiger watches, the license is with Titan. Titan has tied up with so many multiple fashion brands in various different price offerings to cater to the various requirements of the consumer. So what I feel is that travel gear as a segment, and sadly, without taking any names of the current brands, but to be honest, those brands have behaved more as commodity rather behaving as a brand. And
Right.
that is where we see that players like us, or fashion brands entering this the travel gear space, is this is going to give us a good momentum for the next say 3 to 5 years.
Great. Great. The second question was actually related to this. What I was trying to understand was the growth in the company. Will it come in spurts? as you add more brands, are you more dependent on adding new labels and new product lines for your growth, or the individual categories will continue to grow? So you kind of answered that
Yeah,
in the first question. So it's more looks like more secular in nature rather than
it would be, but every brand that we add would for sure
add something more. That is true. That is true. That is true. But the underlying business in the old categories and the old like established brands, that will also continue to grow. Right.
absolutely.
Right. And can you just comment on the margin picture? What we saw this quarter and what we have seen over the last 2-3 quarters. We also know that inflationary pressures are there for everyone, right?
Yes.
And in demand picture is also not very crystal clear. So how do you see everything panning out in a steady state? Because on one hand, you are now getting into um, a particular situation where your size is also increasing. Individual category sizes are increasing, and there will be inflection points where you see good margin levers in particular individual categories and also for the company as a whole. So how do you see the margins playing out?
Uh, See, in terms of, as you're absolutely right when you say that we have inflationary pressure, and I think it's an industry-wide phenomena, and not only in our industry, probably every industry, right? So,
Right,
and coupled with it, since uh, India is still not that adept in terms of travel gear manufacturing,
right,
the dollar also is not helping, right? So,
right.
uh, but in our case, we have one advantage that we don't play in the mass segment, right?
Mm,
And
mm,
the premium segment, it is a little better. It is a little more. I wouldn't say it is very easy, but compared to the mass segment, it is a little uh, uh, relatively easier to pass on that price to the consumer, right?
right,
Because our consumers are not so affected by the inflationary pressures, right?
right,
We are all SEC A plus segment. So, and as a brand, Tommy Hilfiger, if you see, it's a it still maintains its aspiration levels at very high. So we have seen, and hence I told you that in my initial opening speech itself, I said that we have been able to see a higher ASP growth, right?
right, right,
In fact, during the month of May, if I
mm,
may share a figure with you that on our SLG business, on our small leather goods business, in the entire large formats, probably we were the only brand which was at a 0% discount. We were virtually on non-discount, right?
right,
And still we saw a very, very healthy growth in our uh, uh, like-to-like stores as well, right? So
good,
which proves that the power of the brand is such that it should be able to negate certain inflationary pressures for us.
right,
And,
right.
while
So this quarter is a good representation then, 50,
yes,
roughly 50% margins, gross margins. This should be normalized level of margins, right?
yes. Now, going forward, Agastya, what will happen is that when we look at adding more brands to our portfolio, they'll be all strategic decisions, right? So,
Mm,
so we might be adding brands which are lower priced, which gives us a better headwind or a better footing in
mm,
that price conscious market, right? Where if I talk about primarily from the travel gear perspective, that's where the whole heat is, right? That's where the sort of mass consumption happens. So we might be looking at adding brands now, which are which gives us the handle to pitch it probably against a more popular brand in India today, right? We are right
okay,
now pretty high priced from those popular brands, and hence it's a different market segment. But tomorrow we might be entering that market segment with again a very strong brand offering
mm,
and play at that price. Now, once that happens, with these inflationary pressures and all, yes, with those brands coming in, we sure look at that the margin intake will not be as good as these premium brands that we're selling, the
right,
premium brand that we're selling. But overall the size should also increase. So net,
Got it.
yeah, net, I think overall it should be maintained, or probably 1 BPS up and down should be the outlook, is what we're looking at.
Got it. Thank you so much for answering the questions in such great detail. All the best, sir. Thank you.
Thank you.
And congratulations also. Thank you.
Thank you. Thank you.
Thanks,
Thank you,
Abhi.
Vinay.
Thanks, Agas. Anybody else who wishes to ask a question may use the option of raise hand, or else you may unmute and ask your question. Yeah, Raj, you can go ahead, please.
Oh. Firstly, congratulations on the quarterly result. Great results.
Thanks, Raj.
Yeah. So my first question would be, how are you de-risking the business, and what are your plans to bring in more brands?
So as I shared that we are actively in discussions with a couple of brands. It's just that our brand selection. Yes. So it's just that our brand selecting criteria is a little. We've made a stringent criteria to select a brand, and hence generally closing on such big brands takes a little bit of extra time. But we are quite hopeful that this year we should be able to sign another big brand in our portfolio. And in terms of again, price segmentation, this brand would come in below the price point of Tommy Hilfiger. So where today, if you look at Tommy we play between a VIP and a Samsonite. If I talk about travel gear, so we play between a Samsonite and a VIP. So we are about 15-20%, a little 15% lower than Samsonite, but we are at least 30% above a VIP, and 25-30%, 40% actually, and sometimes above VIP. So and we don't intend to bring the pricing strategy of Tommy down, and hence the right way to play is that we get a very strong, equally strong brand in the price segment where we can pitch it on a little more closer to the price point of a VIP or an American Tourister. That's the kind of strategy. So once we see all those brands coming in the next 3 years, I believe that there should be a very, very healthy contribution from the new brands also that we're looking at signing. And that in itself should de-risk the business to a large extent. That's one. Number two is we are also working on building our own store chain network. And in terms of bag line, we currently have about 16 bag line stores across the country, and which are touchwood performing very, very good for us. So slowly and steadily we are establishing our own identity, and in fact there we have the first mover advantage. We would be the first multi-brand specialty bag store in the country, right? So where we can house more than one brand in our store. So that again somewhere leverages our network and the infrastructure, but de-risks the overall business. So I hope I've been able to answer your question, Raj.
Yes, I got my answer. Thank you. And I have one more question. So, are you looking at any geographies beyond India? And what could be your strategy on that front? Like, will your existing or new brands be the driver for export sales, or will it be your in-house brands?
Right. So actually, that's a very good question. You got me there. So yes, see both the things. One is I think India in itself has the opportunity today where I don't see any rhyme or reason why we can't grow at a 30% plus CAGR for the next 3 years, 5 years, right? So that kind of a growth in itself is possible in India without having to move here and there. But at the same time, by now we've created a very, very good engine where we understand uh, a brand's handwriting, right? So right from design, development to getting that brand manufactured. So we've sort of built a very healthy engine when it comes to licensing of these accessory bags as a category, right? And if I talk about, if I look at the overall world scenario, US is very big on licensing, right? So there are billion dollars, as in $4 billion companies which are built over licensing, right? Europe again has a lot of these big giants which are into licensing and who built a very, very big business of keeping all these brands and uh, uh, moving into various different categories and all of that. But the moment I look at MENA, or this Asian region, there's hardly any licensing sort of player, right? So that is where brand concepts gets. But we are at a unique platform where it's not only India, but so for example, Middle East, your uh, the African belt, the Asian, the South Asia as a market. There's no we get a sort of a first mover advantage, if I can say that, right? So we are looking at leveraging that. So probably so for example, for Tommy, we don't have rights for international sales as of now. But with a few new brands, uh, we would be pitching in for extension to a couple of other countries as well. But to be honest, I can't comment right now whether we would get that license or not, right? So it's only time which will tell us. But yes, when we are making a pitch, uh, uh, we make sure that we make a strong pitch. We have our partners in line who can take us to distribution for the entire Middle East. So all those talks are on, but I can't, say it with conviction. So it's like if it's not signed, it's not signed, right? So
True. Right.
when we sign it, we'll definitely announce it.
Okay, I got. Okay, thank you so much, Abhinav.
Right.
Thanks, Raj. Before we go to the next participant, there's a question in the chat. Can you please talk about working capital across all the formats of distribution?
Okay. Working capital across all formats of distribution.
Basically, your receivables and your inventories, and how do you manage all of that?
Okay. So I think see, I wouldn't know the exact percentages of inventory holding against this thing, because broadly our inventory is divided between two aspects. One is there's certain inventory which it's a different line which goes to the e-commerce. So there is a separate e-commerce line. So we hold inventories separately for certain styles which are e-commerce specific, and then the rest is all offline. So, and the idea is that we don't hold inventories exactly according to the channel wise, because then optimizing inventories doesn't happen. So hence, from an inventory perspective, we have offline and online, these two segregations, and through that we still keep it fluid so that we don't ever have a bad inventory situation happening in either of the places, right? So uh, so that's from the inventory perspective, channel wise. If you look at from a debtor perspective or debtor wise perspective, large format stores have a little higher debtor cycle. Then followed by your I think the rest all debtors are pretty much in line. Our debtor days range from a contractual perspective, if you'll see, it ranges from say 45 to 60 days with most of the cases, except for the large formats, of course, where it is a much higher data day. But considering the transit time, considering the deliveries and everything, from the date of the invoice, our data days are almost about less than 70 days with all the other channels, 75 days with all the other channels. With large formats, obviously tends to go a little higher. And hence, we are roughly about 90 to 95, 90 to 100 days debtors. Why you see a little higher debtors in terms of the balance sheet or in terms of our results is because debtors are always calculated including GST, and your turnover is always calculated removing the GST. And in our case, the GST is about 18%. So it inflates the debtors by 18%, right, over this thing. In terms of our working capital management cycle, in terms of various channels, of course, online or digital is one of the most efficient, where our working capital cycle is very healthy. It's roughly around somewhere around 100 days, or a little less than that. So under 100 days is the overall working capital cycle. For D&D also, in fact, we introduced a concept of regional stockist, a master distributor. So through that, we've been able to manage our cash flows much better. And hence, if you'll see, we've been cash flow positive for the past 3 years, even during COVID, while we declared losses, but we were healthily cash flow positive. And we continue to be so. So that is because of effective working capital cycle management. So even our distribution business, which typically in most of the companies have a very high working capital cycle, our working capital cycle is about 90 days. So we do about 4 rotations over there. Large format is the only one which is an aberration, which we all understand. That so while one of the major channels for us is on outright, one channel continues to be on SOR, and hence from a data perspective, it looks a little higher on the board. So so that's where some better management still has to come. There is a lot of scope of improvement over there. But rest all, I think our company-owned stores obviously will have, because all your sales is in cash. So obviously that's far better. Even our franchisee stores, for that matter, are there. The overall working capital cycle would be between about 120, 130 days. So that's where overall it is. Overall, I think our overall working capital cycle is somewhere around 120 days odd. So we're able to do sort of a rotation of 3 approximately, which is we keep internally also, if we compare it to any other of our peer group or competitors, I think we have a much better, much healthy working capital cycle days than a lot of competitors. I hope I've been able to answer this question.
Right. Thanks, Abhinav. We'll take the next question from Yogesh. Yogesh, you can unmute and ask your questions.
Hello, can you hear me?
Yes, we
Yeah.
can.
So actually, I have just started following this company. So
Mhm.
excuse me if the questions are repetitive in nature. First thing I wanted to know, of the total stores that we have, how much are company owned and company operated as of now?
So about 9 stores are company owned, company operated.
And how much are FOFO? Like
About 16 stores are FOFO.
okay. So out of the total sales, I see 5% sales is coming from our own brand, or sorry, it is coming from the license, the what to say, LFS.
Yes.
Correct. And 5% is coming from LRFS.
Right.
So is it fair to assume that our own branded sales is 5% of the total sales? Not except for Tommy, I'm saying. Your Sugar Rush and other brand, Vertical.
Okay, I didn't get you here. You said the LFS
Hmm.
is 17.7% for this quarter, if you're talking about.
Ah.
And the LRFS is about 12.2.
Okay. So I wanted to know what is our own branded sales from Sugar Rush and Vertical?
About 10%.
About 10% is that. Okay.
Yes.
And that is basically the company owned, company operated, and franchise owned, franchise operated.
No. So, sorry, there's a little bit of a confusion over here. See, LFS basically means large format stores. So your likes of Shopper Stop, Lifestyle, Central, or Capsons, all these big department store chains, right, where we supply our brands. And LRFS is basically licensor flagship stores, right? So a licensor's flagship store. So, for example, Tommy Hilfiger has its own stores, right? So they have about 100 stores across the country. Now, these stores also sell our products. So the Tommy India team, as in the company, they buy from us and they sell it in their own stores.
Okay.
Right. So that's the brand's flagship stores, right? So tomorrow, when we had and Global Desi, for example, again, and GD has about more than 200 stores across the country. So the bags that they were selling were the bags that was being supplied through brand concepts, right? So that capturing is of those sales, right? This is just a channel-wise breakup. When it comes to brand-wise breakup or brand breakup, I had mentioned that our own brands, Vertical and Sugar Rush, are contributing almost to about 10% of the sales. So for this first quarter, the sales has been about 3.24 crores, right? And where we've been selling all these is obviously some in distribution, some in our own stores. So Sugar Rush handbag, for example, is seeing a positive result in our own stores. And plus, we are also present across multiple digital platforms. So we are present across Amazon, Flipkart, Myntra, all these places. We sell over there. And on top of it, we are able to garner some sort of corporate sales inquiries, institutional business, where we do it in our own brands. So overall, net, our own brands is about 10%. So that's not reflective of in the sheet. The sheet is
the network basically.
Channel.
Okay.
Yes.
So in Coco and Fofo stores, you sell all brands basically. You can sell Tommy also, and you can sell Sugar Rush also, or you can sell Vertical also.
Yes.
Okay.
And tomorrow, whatever brands that we add will go into all these stores.
Okay. And what is the sales mix for Head, or it's too nascent right now? Because I see somewhere you've written Head also as a part of our brand portfolio.
Yeah, it used to be, Yogesh, in fact. And I think I mentioned this in my initial listing that there were 3 brands that we have let go of, Head and Global Desi. These are the 3 brands that post-pandemic last year, we've let go of these brands. However, since our contracts were longer and there's certain stocks which are still there, we continue to sort of sell those stocks. But going forward, the new season planning and everything, we've stopped in these brands.
So any specific reason what went wrong or why you guys decided to go back?
Yes, so we've had our learnings, and hence I was mentioning that we've made our brand selection criteria even more stringent. So if I talk about individual brands, for example, with Head, the aim was that if we can look at the sports brand sort of flavor, which if you see in India, still brands like Nike, Adidas, all these are are dominating, and uh, they are a cult. So there's a huge section of population which loves these sports brands, and hence we had sort of taken a bet on head that in terms of the travel gear, in terms of backpacks, in terms of all of this, uh, we might have a sports meets fashion kind of a segment which we'll be able to drive. But the popularity of head in India was very, very limited. So it's a very niche brand still. It doesn't have widespread presence in India. Doesn't have any. There's no store of head in India. So since the brand, the parent itself is not that widely present in India, hence you know we had a tough time in sort of making people educated about head. And uh, one beauty of licensing, being in licensing, is that, see, I'm not here to build these brands, I'm here to sort of ride on their popularity, right? That's the reason I'm paying them a royalty. So if a brand doesn't do well, uh, i might I might as well come out of the contract and move on to another brand. That's the beauty of this. Uh, uh, Unlike, when you start investing heavily on your own brand, even if you're bleeding, you will continue to bleed. Over here, it's not like that. If it is not working, we'll come out of the contract. And then global. So one learning that we got from head was that if you're signing an international brand, it 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 needs to have some sort of presence in India, right? It needs to. We don't want to build that presence in India. It already needs to have a presence, and only then we will take that brand. Uh, Coming on to and Global Desi, what we realized is that while they are both beautiful brands, and they continue to be one of my very, very good friends, uh, very good relations with them still. But sadly, the problem was that it was a category construct problem. So and Global Desi, both, if you see, they are Indian wear kurti brands, right? And handbag is mostly a Western wear, uh, a Western concept, right? It's a Western handbag. You can't sell those Indian handbags in volumes. Potli bags and clutches and all that वो Indian उसे sarees के साथ जाता है, but the bulk of the sale is of those Western silhouettes. So there, we felt that there was a brand misfit, that an Indian wear, an ethnic brand, और उसका आप Western handbag कर रहे हो. So while we were getting a very, very good response in their own stores, so in LRFS, in and Global Desi stores, we were getting a very, very good response. But outside that, the response was a little timid. So, hence, we decided to hang our boots on that. And another lesson learned, that going forward, don't sign Indian brands.
Okay.
Right.
Fair enough.
So I hope I've answered your question.
And I have one more thing. So VIP used to import from China a lot pre-pandemic. I think 40% they used to import from China.
Right.
And post-pandemic, they have increased their capacity and they are importing around 10% from China. So
Right.
do you see a lot of market share gain by the players like VIP or Tommy or Safari, the Chinese brands which are selling in India, a lot of market share gain happening, or you think the price points were totally different, so that is not getting affected?
See, for us, these Chinese brands or local imports or whatever doesn't affect us, because currently that's not our market segment where we operate in, right? So we operate in the branded segment, so I don't see that much as a challenge. In fact, there I would say that be it Safari or Sky Bags, with Safari, Sky Bags, or American Tourister or Chameleon, with all these brands, what these players have started doing actually, which is very good for the industry, is that they are converting the bottom of the pyramid. They are converting that from a non-branded to a branded segment, right? So at least that churn is happening and happening very, very steadily. And that's music to our ears, to a player like us, which operates in the premium segment, because um, uh, once you come into a branded segment, it's just a value chain which keeps going up, right, rather than coming down anytime soon. And as I keep saying, fashion is a one-way street. So if today you are wearing a Peter England, tomorrow you move from a Peter England to an Alan Solly, from an Alan Solly to a Louis Philippe, from Louis Philippe to a Tommy, until unless you've really done bad in your life, you will never go back to a Peter England, right? So it's a one-way street. You keep going up the value chain. So the more people who come into this branded portfolio, the better it is for players like us who operate in the premium category, because these guys will keep coming up as the economy keeps growing. In terms of import, yes, we also were very, very heavily. In fact, pre-COVID, we were almost 100% import when it came to our travel gear business. Thankfully, our small leather goods business, it was always India, and hence we did not see that much effect happening on the small leather goods business. We were able to garner all the quantities back. We were able to work with our suppliers very, very closely and get the supply chain sorted post-pandemic. When we had to hold on to the orders, we were able to do that much better, because it was all Indian suppliers, and you've been working with these suppliers for a pretty long time. So from a small leather goods perspective, so hence one huge chunk of our business was always from India, which was a boon for us. Uh, Now, thankfully, before COVID itself, we had started working with certain Indian suppliers in terms of our travel gear, and we worked very, very closely with them. Obviously, when it comes to the quality standards, and our products are obviously more led by design, okay, right, in terms of its nature. So it takes a little. India is still not that good in terms of manufacturing when it comes to manufacturing of travel gear. So, but the process started thankfully before COVID itself, and now I can say that uh, we are getting quite better in terms of our manufacturing capabilities in India. And going forward, I see that it will our dependence on China will reduce significantly once all these suppliers uh, are up and running completely for us.
And another thing, do we plan to set up a manufacturing plant or a stitching line or something like that?
See, as I said, travel gear, from the travel gear perspective, the if you look at all our peer group also, VIP has its own complete manufacturing base, and now in fact for the backpacks and stuff like that, they're all 100%, almost 100% internal, right? Self reliant. Uh, Even Safari has been investing pretty heavily in terms of their own manufacturing facilities. So, and thankfully, our quantities also now are such that it makes sense to have your own sort of manufacturing setup. But having said that, I've always firmly believed that uh, manufacturing is a different ball game altogether, and hence we're looking at whether it is if I look at to set up something from scratch today, I think it'll take a lot of time. So we are exploring all the options, whether it is organic or whether it is inorganic, or whether we can just probably take over a unit, right, where uh, everything is a lot smoother. The learning experience, we don't have to sort of burn or bleed to get that experience. So exploring all sorts of opportunities, and we shall keep all our minority shareholders also abreast on whatever developments happen in from that regard. But yes, in the travel gear segment, from all the mathematics and everything that we've done, it looks feasible that we might have our some sort of in-house base.
I think I'll come back. Thank
Hello.
you. I think I'll come back. This should be okay for now.
All right. Thanks, Yogesh.
Thank you.
Yes.
Anybody else would like to ask a question? We have one question in the chat again. How many EBOs are you planning in the current year? Own plus Tommy.
Sorry, how many? I didn't get
How
that.
many EBOs are you planning to open in the current year?
Mhm.
Own plus Tommy, as in Bagline and Tommy.
See, this year now, from here till March, we're looking at opening another, say about 5 to 6 new stores, which should take the store count, to about 32 stores by the end of this year. And we look at primarily opening. So if it is a strategic location or something, we might open one Tommy Travel Gear store, but bulk of it is going to be bagline. So the focus is more on opening bagline stores, so that tomorrow, if we have new brands or further brands, we are able to include those brands in our stores.
Sure. Abhinav, since there are no further questions, would you like to give a closing comment before we end this call?
Yes. So thanks a ton, guys. And I think we poised for a very, very good journey going ahead. Would just like to add one more aspect to this entire thing. I think as a company, we are just at that influx point where the entire engine and everything is set, is ready, the infrastructure is ready, and the moment we have a couple of more brands which gives us a more inclusive play, which gives us the play of certain price points also, I think that's when the whole this thing will sort of will come together, right? So and I'm very, very thankful to all our minority investors, all our investors who have shown faith and believed in us, and we will continue to grow strong. So needless to say, we are now on the runway, and we'll ask everyone to buckle up your seats and sit back, relax, and enjoy the flight.
With a Tommy Hilfiger suitcase, yeah.
Of course.
Thank you so much, Abhinav, and thank you all participants for removing your time for this call. And look forward to catching up with you all in the next quarter. Thank you so much, and thanks to the management for this call.
Thank you, Vinay.